Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Okay, premium members, which is the only people getting content from me for now on, at least for the foreseeable future. In front of you got the S&P 500, and we're going to do a little preview. Today's Tuesday, and we're going to talk about where I think this is headed now. Not too much has changed from my last video last week as far as my forecast of what I think is going to happen to the S&P 500. But let's talk about it anyway. So we're still on the March 2022 contracts here for the S&P 500 index futures. Okay, for those that don't know, you can also trade the MES futures. If you're not trading futures, guys and gals, I highly suggest you get an account, a futures account. Okay, you can also trade options, obviously, but it's going to be really difficult to be trading optimally to the short side if you're not trading futures or options. Okay, it's going to be difficult if you're trying to trade index, those reverse index or bear ETFs, I should say. It's definitely not the way to go. You don't want to be buying long on a bear ETF, S&P 500 that's bearish, right? So in other words, as the market goes down, that ETF goes up. You don't want to be doing that. Those are highly inefficient instruments or ETFs. They are rebalanced frequently. Okay, it's definitely not the way to go. Okay, so if you can get yourself a futures account or at least get options trading up, that's what you really want to be doing, okay? Okay, so you notice I don't have my indicators on here. For those that don't know, I usually have a set of indicators down here, but I took them off just temporarily because I want to talk about something here. So let me scroll this out a little bit and widen this out. For those who don't know, on the bottom here we got cycles. So this is a very big cycle right here. Okay. There's some smaller cycles in here. Here. You can see green one coming down there, and it comes up like that. Okay. Some smaller cycles in there. Over here you see three cycles coming together approximately at the same time, right, in this area, okay? If you look at the dates down there at the bottom of that, they run from about 320-ish all the way out to maybe like almost the beginning of April. Okay, so that's a real hot spot, hot time. About the third week, maybe going into the third week of March, to the first couple days of April. That is a huge, huge time. I believe it is, okay? So those who don't know about cycle analysis, wherever these cycles come together, like let's pick these green cycles that come together right here. So it comes down into this time, and then a new cycle starts. Well, you'll see that there's a price low approximately around that time. Looks like it hit more of the red cycle than the green one. Yeah, you got one right here too, which is not too far removed from that cycle there. So that's the premise behind cycle analysis, that where the cycles come together, you have a low that occurs in the price action. Okay, so if I crunch this back up, it should be pretty obvious that there's a cycle low in here, right? There's a cycle low here. Yeah. See how the price comes down? The price came down here, and you can see the cycle lows there. It may not always be exactly spot on, guys, to the day, guys and gals, but it's that's not really the whole point of cycle analysis. Cycle analysis, the point is to get you pretty close so you can make some good educated decisions, okay, and get your timing down to make good trades, okay, especially swing trades. But we'll look at the hourly too today on this. Okay, so why did I take the indicators off? Because we really want to look at this candlestick right here. This candlestick, it may be hard to tell in the video, but the bottom of the candlestick is right here. This is a wick, a really long lower wick here, all the way to there. Okay, and the low there is 42.12. 42.12.75. We'll just go with 42.13, close enough. Okay, the low of this candlestick is 42.50. Okay, So we're talking about 38-point difference between this low right here. Let me get the little pencil. Between that low right there and this low down here. Okay, this candlestick comes all the way down. So they're not too far off. Okay, and this is the 50-day moving average right here, right? So I don't, if we get price action that gets below this 42.12, that's going to be huge. 42, call it even 42.13. If price action comes down below this 42.13, that's going to be absolutely huge. That's going to be a major breakdown in the market. Okay? And it got pretty close in this candlestick, which was today. Got down, like I said, down to 42.50. So it's fairly close. Even if the market, so I'll put the indicators on here in a little bit, but even if the market comes up, and even if it breaks through this 50-day moving average, okay, I don't think it's going to get above 4,600. Okay, that would be a stretch if it gets up into here. I think if it gets up near 4,600, it's going to run out of gas. If it gets that high, that'd be a pretty big move. I don't think it's going to get it that high, but it might. You can see here it got rejected. On this new little cycle right here, which is really just this little bump right there, that's that. I mean, it came up, got rejected right off the 50-day. Now we have a major price decline over the last 2 weeks trading days worth of 2 weeks worth of trading days. So we might see a little bounce there, maybe, but we may not get a bounce at all. Though the indicators are suggesting, and when I put them up here in a moment, the indicators are suggesting it might be a little bounce, but I don't think we're going to break through this very strongly. And if we do, I think it'll be short-lived. So that's kind of my take on the daily, okay? So remember, this area right in here, third week of March out to like the first few days of April, I think that's where we're headed. And even if we come up like this, and even if it happens to be stronger than most of us think, I don't think it'll get above 4,600. I don't think it's going to get anywhere near 4,600. I'll be surprised if it gets above 4,500. Okay, but if it comes up into there, whatever, okay, and then I think it's going to be moving its way down into this time frame down in here, okay. So for swing traders, I'd be looking for any kind of sense of rejection off that 50-day moving average. That's what I'd be looking for. Okay, quick look at the monthly. Nothing's really changed. You know, let me go back to daily. We'll put on the indicators just real quick here. Let me go to the studies and turn these on. Okay. If it would actually work with me here. Okay. Apply that. Okay, there are the studies. All right. Stretch them out here a little bit. So, you know, there's a potential for a bounce. The Big Daddy says there might be a little bounce here. The MACD says forget about it. It does not look healthy. So, like I said, I don't think there's going to be much of a bounce. There could be a bounce here, but if it does, I don't think it's going to be very strong, and I think it's going to fizzle out, and I think it's going to continue down into this area, okay? This is just weak. That MACD looks weak to me, guys and gals. Okay, let's switch over to the monthly. We're just going to speed up this video, and I'll cover gold. Monthly hasn't changed. End of June. Now look at this thing. Bombs away, guys and gals. Bombs away. Get ready. I'm telling you, there's more to come. Bombs away. That's what the monthly chart says to me. Look at this MACD. Way up here. Look at the zero line. Way down here. This MACD is so extremely elevated, it's ridiculous. Ridiculous. Way up here in the 427 area MACD. That's just stupid. It's just absolutely ridiculous. 427 on a MACD. Whoever heard of such nonsense? That MACD's got no chance. Crash and burn. Get ready. So, end of June. Hasn't changed. Okay, go to the weekly. That one's May 8th. That hasn't changed. And then out to August 28th. Look at this weekly. And by the way, the MACD is still above the zero line on the weekly as well. Look at this MACD. These short-term indicators stand no chance because the MACD is pouring it on. They're just going to, They're not going to be able to, then forget these short indicators for a while. They got nothing. They might show you, you might get some little bounces, but this, just, all you got to do, now through summertime, keep an eye on the MACD on all the charts. And just see how wide they get. Especially if they're above zero like these are. Okay, let's look at the hourly. Let's see, has anything changed on this hourly? Let me scrunch up the hourly here and scroll over a little bit. My goodness, what an amazing, look at this hourly chart. Just 1, 2, 3 back here. Okay, look at that one, 4 there. Wow. So it's not always spot on, but more times than not it is. So what's the next hourly? February 23rd, 7 p.m. Texas time. Mark it. Pause the video. Go back, watch it again. Okay? The end, February 23rd, 7 p.m. Central Standard Time here in Texas. Okay, and the one after that, March 27th, about 11 a.m. Texas time. Okay, and the one after that, March 1st, about 2:15 p.m. Texas time. Okay, so now you have kind of the sense of where the hourly would be having its cycle lows. Now, hourly is going to be very sensitive, and these cycle lows could definitely change, you know. So that one we talked about there, and there, they could change. Okay, but you have, you know, about 7, 8, whatever, 2 weeks worth of trading days of where the hourly low is. Okay, so now you know. That's 223 right there, 223. Okay, and this is an hourly. Yeah, 7 p.m. Okay, so that's the next one. 7 p.m. CST. Or it might be just Central Time, depends. I'm not sure which one we're in right now. Okay, so that's what's going on there. Okay, so that's it for the S&P 500. Let's move on to gold. I'm going to finish up the video. I'm just going to do S&P 500 and gold today. I think there's a big opportunity in gold. Okay. And let me switch over to the daily. And we'll get on the daily chart. And also for those that are trading futures, remember you can trade that E-micro gold. Super cheap to trade. Okay, gold has been on a ripper, man. Look at this gold. Absolute ripper. But I see some divergence warnings coming up here. So we'll see what gold does. I wouldn't short it just yet because it's floating around up here with these little kind of spinny top. Right? I wouldn't short it just yet. But March 13th. Okay, that's what that is. March 13th, 313. Okay. Now you don't want to wait till 313, but you're going to start to keep an eye on these indicators. If the MACD starts getting a little pinchy, if the SMI starts rolling over and coming down, okay, we got this divergence warning going on here and one right here. I think it's legit. I think I'm not so, that one and these don't impress me, but this last one on the right does, that little dot and that little dot. And I think we got something coming up here. I think it's going to come down. I don't know how much. So I'd be looking for candlestick patterns that are going to start to show you that something's going on. Study your candlestick patterns, guys and gals. If you're not, you're missing out. And then you couple your candlestick patterns with your indicators. The MACD pinching and closing, okay? The SMI, Stochastic Momentum Index, for those who want to know, begins to roll over and widen. In other words, you'll see a gap, right? It'll start to gap, right? You'll see the blue line go like that, and the red line begins to separate from it like that. Kind of like what you see over here. So you start getting that, plus these divergence warnings, plus the MACD, if it starts to do one of these and starts getting a little like that, okay, then you want to start trading that short. But I'd wait. You want some confirmation in here. What type of confirmation? See, it's over here. That's good confirmation. This candlestick right there, that second one, that second red one. As the bottom of the candlestick breaks below these candlesticks, see that? Everybody see that? Let me just give you all a little lesson here. You don't just want to jump in right now and start shorting it. No, and then your timing's bad, and then the market still goes up for who knows how much more before it starts to break down. Okay. So this is the candlestick I would have traded short. And the reason I would trade short is because the bottom of that candlestick, that bottom wick, is below all this mess. You can see it. It should be like super obvious. Right? See how the bottom of this candlestick and this candlestick and this candlestick and approximately that candlestick, there's 4 of them there. They're all kind of in the same area, riding right along this line. Okay, got it? And then when this one broke below it, that was your indication. Then you could start trading right at the bottom of this one. Maybe it could have happened at the beginning of the day, the middle of the day, end of the day, doesn't really matter. Once it got below these candlesticks, you could take a short position. And then the next day was the money maker, baby. Okay, it came down all the way down and touched the 50. Okay, look, the MACD was beginning to help you out as this area got narrower. Look what the SMI was doing. My goodness. Look at the SMI on that day at the very, very bottom. Okay, so we're continuing the lesson here on the daily chart. I want you to look at this indicator down here. Okay, look in this area right in here. I'm gonna hover over the candlestick that I say you should trade on. What is the SMI doing? Look at that big gap in the SMI. Okay, and look at the MACD at the same place. So you want to be looking at this indicator and this one, these two. Okay. So you're going to be looking in this area right here, as well as the one down here, okay? So let's look at it together. So why did remember I said we're trading that candlestick right there? Because it's below all of these. Okay, so let's look at those indicators. Let's start with the MACD. Look at the MACD. It's almost pinched down on itself. It's like all of this room disappeared. It's almost completely gone, right? That's a big indicator we got about to get a crossover. And then you look at this indicator, you can see there's a big gap starting to form. It's already formed for quite a few days in there, like 2-3 days. So we waited for a candlestick to tell us that, yeah, we've broken below this obvious trend line, bottom of the trend line right there, on these 4 or 5 candlesticks. 4 candlesticks there. And we've got confirmation, okay, from the other indicators that this is a red light special. Not a green light, red light. We're going to short the tar out of this baby and make a lot of money. All right. So now that you know how I would have traded that, you're going to do the same thing over here. You're going to wait. Just wait. Look at these two bottom of these candlesticks. They're almost exactly the same. They're like just a few points away from each other. Got it? You want to see a candlestick that breaks below that. Okay. Break below it pretty good. You want to see these indicators do the same thing that we talked about over here. Okay, and it's probably going to happen because I'm seeing divergence, which tells us something's coming up. Okay, so short, get ready to short gold, just not yet. Wait for confirmation. What confirmation? All the stuff I just talked about over here. Go back, rewind the video, watch it again. Then you watch this gold action for the next week, next couple days. It could happen quick. It might be tomorrow, the next day, 3 days, whatever it is. It might be a week. Just watch the video that I just talked about and you'll nail it. You'll absolutely make money in this. Okay, most traders just get nervous, they get anxious, they get in, their entry stinks. Okay, it's probably, guys and gals, better to be just a little bit late than early. Okay, if you're too late, well, that's bad too. But it's probably better for beginning traders to be a little bit late, just a touch late. Meaning you got a lot of confirmation. You may not make as much profit, but you'll still make profit, and that's the key. Okay, and the other part is traders that often make big mistakes is they don't know how to properly exit. They hang on to their positions too long. They're always looking for their extra buck. My goodness, man, if you make 5%, 10%, 15% on a trade, especially if it's over just a period of a few days, just be a happy camper. Take the profit. Wait for the next trade. Everybody's always trying to hit a home run. That's what gets you traders in trouble. Okay, all right, let's take a look at the hourly on gold, and we'll finish up this video. All right, so here's the hourly chart. Is gold obeying the hourly rhythms? Yeah, just okay. Nothing great. Looks like these cycles are a little bit, I mean, they're okay. They're a little bit not super predictable. The hourly cycles on gold are a little bit, It's not really, it doesn't look like it's something that I look at that I say, wow, look at these hourly cycles on gold. It's not really there. Kind of is here and here. Here. But see how this one's not really playing nice, but maybe that one does. And you might have a little something there. And they're just kind of okay. These cycles are just okay on the hourly. So I'm not going to put too much credence into these hourly charts for the gold. Gold right now is the daily chart swing trade. That's where you're going to make the money. And I know some of you don't like doing swing trades, and you're missing out on some really good opportunities. For people who only day trade, that's great, especially if you make a lot of money, good for you. But I honestly think a lot of day traders miss out on big profitable trades because they're too caught up in the minute-to-minute, small time, really small scale and small time frames, and they miss big profits on swing trades. You can do both. So when I look at gold, I see a swing trade going into March 15th. That's it, premium members. Your lone ones getting the content. Hope you enjoyed it. Talk to you all real soon again next time. One last thing I want to say before I leave. Don't trust YouTube to give you notifications. Okay, there's a link below this video in the description for the Discord server. Join it, because that's the only reliable place you're going to get notification. You can check the general channel or the S&P 500 channel. I'm going to make sure just to post it in the general channel. So just check the general channel and you'll see any videos I posted. The links will be in there. You can just click on it and go watch it. Because don't trust Google and YouTube. They're the worst of the worst. I've had premium members tell me they don't even get notified. This premium members, paying members, and YouTube won't notify them. Man, I hate them. Hate them. So join the Discord server. This way you won't miss any notifications, all right? Talk to you all real soon again next time.